It is great to see you. So let's dig into this crypto winter here, Andrew. It's got Bitcoin. We're back below 69,000 here. What explains this, Andrew? One. And two, I'm also interested to get your take on how this crypto winter, in your opinion, sort of compares and contrasts with prior drawdowns.
Yeah, thanks, Josh. Thanks for having me on. It's great to be here. So first, I'd actually argue that we're not in a crypto winter. Now, it depends how you define crypto winter, right? But if you're using crypto winter synonymously with a correction, then sure, we're certainly in a crypto winter. Since October 10th and slightly before that, Bitcoin's down about 45% from all-time highs. ETH is down about 55%. Even just over the last 2 weeks, Bitcoin's down about 20%, ETH is down about 30%. But when you refer to a crypto winter, the way I define a crypto winter is a period of time when token prices fall, but development slows, TradFi initiatives, decelerate, and really questions emerge about the longevity of this industry. The last time that happened was actually in 2014, before Ethereum had even launched. It was really just Bitcoin. Now, so again, I don't think, depending on how you define it, I would argue that we're not actually in a crypto winter. We're in a correction. But what's driving this? I think that there's a lot of confusion because everybody likes to compare Bitcoin to digital gold, or as digital gold. And I understand the comparison. There's certainly some similar properties. The problem with that comparison is that Bitcoin and tokens more broadly, they don't trade like gold. They're far more correlated with risk assets. They're far more correlated with the NASDAQ. And so over the last 2 weeks, you've seen, somewhat of a risk-off sentiment. You've seen a rotation from the growthier parts of tech, specifically software, to value. And so, therefore, you've seen tokens fall.
So one point you made there, Andrew, which I think is just dwelling on for a second, your point seems to be, yes, some of the price action we're seeing is rough, but the industry to you looks resilient.
Yeah, absolutely. I mean, we really are as bullish as we have been on the long-term, on the long-term outlook for this industry. I mean, we can certainly talk about near-term price action and the data transparency that blockchains provide a really rich data set, really beyond what's available in traditional markets. And, I'm happy to talk about that. But over the longer term, when we think about what drives long-term value for some of these tokens, it's really infrastructure maturity and regulatory advances are driving TradFi initiatives at a pace that, it's really hard to keep up with the pace of announcements.
Can I ask you though, Andrew, when you look at Bitcoin here, and as you mentioned, we're down 45%, right? You're below 69,000. Are there signs, are there signals to you, Andrew, that you're looking at that say, okay, we've bottomed, or that we've at least started a bottoming process?
So our view is that, if the question is when do we go higher, our view is that we might be approaching an inflection point, but we're not there yet. And so I mentioned the data that's available due to the transparency of blockchains. Now, if you look at token holders, specifically Bitcoin, you've seen retail, and by retail, I mean holders that hold less than, one or fewer Bitcoin. You have seen those small retail holders begin to buy really at, the middle of last week. However, if you look beyond the holders that, hold between 1 and over 1,000 Bitcoin, known as whales, they have not begun to buy. In fact, they are net sellers. If you look at ETFs, you've seen some of the largest net outflows from the spot Bitcoin and spot ETH ETFs really since their inception. There were large net outflows just yesterday. So I think that the retail buying is constructive. But if the question is, have we reached a bottom? Are we going higher? I don't think that we're quite there yet.
What about, I'm just trying to think through potential catalysts, Andrew. What about if you got that market structure bill in Washington signed and delivered on the president's desk? I'm wondering, do you think that could be a catalyst on your radar?
Yeah, absolutely. So, our view is that a comprehensive regulatory framework is one of the largest drivers of TradFi adoption. And TradFi adoption, people focus on the big headlines, BlackRock, Templeton, Fidelity, JP Morgan, all of their tokenization initiatives. But what's often missed is that just about every TradFi initiative actually also comes with a blockchain native partnership and a blockchain selected for settlement. And so when you think about the tokenization of traditional assets, they're using blockchains for settlement. And we think that you see a paradigm shift in network activity and also driving value to the token holders for the tokens that power the blockchains that are able to capture this network activity. But we had Genius just pass in July, and look how many stablecoin initiatives you've seen emerge just over the last several months. You had Fidelity launching a stablecoin last week. You heard an announcement from a consortium of U.S. banks, including B of A, Citi, Goldman. And so when you think about the market structure, Bill, it's kind of interesting because it actually has very little to do with Bitcoin and everything to do with blockchain technology, financial infrastructure, and financial institutions.
Andrew, so great to have you on the show today. Appreciate your time.